All right, welcome to The Explainer. Today, we're digging into the absolutely massive financial gamble that's fueling this whole AI revolution. You know, we all see the magic on our screens, but what's really going on underneath? It's a multi-trillion-dollar bet that's changing everything. So let's get into it. So, let's kick things off with something you might not expect to hear. It's a pretty candid admission from the guy right at the heart of it all, OpenAI's CEO, Sam Altman. He basically said, yeah, this whole thing, it might just be a bubble. You know, the kind that happens when a bunch of really smart people get a little too excited. So that's the big question, right? Is this AI boom the real deal, or is it all just hype? Let's take a look.
I mean, for most of us, AI just works. It feels like magic, right? It's writing our emails, making cool art, answering any question we can think of in a split second. But that super smooth experience? Well, it hides a story of just incredible and incredibly expensive scale.
Okay, just look at this number, 800 million. That's the number of people using ChatGPT every single week. To give you some perspective, that's more than double the entire population of the US. I mean, this isn't some niche little tech thing anymore. It's a full-blown global phenomenon, and the speed at which it's grown is just explosive. But here's the thing. While all that software feels weightless, like it just lives in the cloud, the reality on the ground is, well, it's anything but. Behind every single one of your questions, every image you create, there is a massive physical infrastructure. And it comes with a truly staggering price tag. So what are we actually talking about here? What is this physical machine behind all the magic? Well, you need to picture a global construction project on a scale that is honestly hard to wrap your head around. Get ready for this number. McKinsey thinks that just to build the data centers we're going to need for AI by 2030, it's going to cost $6.7 trillion. Let that sink in. That is more than the entire economy of Japan. We are talking about one of the biggest spending sprees on infrastructure ever, in all of history.
And this really gets to the heart of the gamble. It's kind of like building a giant, super expensive highway system for cars that, well, they don't really exist yet. The industry is spending somewhere between $7 and $8 for every $1 it's currently making in revenue. To put that in context, even at the peak of the dot-com bubble, that ratio was only 4 to 1. So they're spending all this money now, betting that the users, the traffic, will show up later to make it all worthwhile. And this insane spending spree is having real-world consequences. It's creating a huge squeeze on the global supply chain for computer hardware. We're talking delays of up to 2 years for top-of-the-line hard drives. The price of essential memory has literally doubled. Flash storage up 50%. Why? Because these AI companies are basically outbidding everyone else on the planet for the parts they need.
So this brings us to a pretty obvious and really important question. If they're spending way more money than they're making, where is all this cash coming from? Who is paying for all of this? Well, the answer, for the most part, is debt, specifically corporate bonds. This is where huge companies go to borrow billions of dollars from investors, and the tech giants are diving in like never before. I mean, Meta just announced a record-shattering $30 billion debt sale. Not long after, Amazon went out and raised another $15 billion. They are borrowing money on a truly historic scale to pay for all this AI infrastructure. Okay, and this is where things get really interesting, and maybe a little bit weird. There's this financial strategy at play that some people call circular financing. Here's the basic idea. Step 1, a big chip maker, let's say NVIDIA, invests a bunch of money into a smaller AI startup. Step 2, that startup turns around and uses that exact same money to buy a ton of chips from NVIDIA. And then step 3, NVIDIA gets to book all those purchases as new revenue. See what's happening there? Some analysts have this great name for it, the Ouroboros. You know, that ancient symbol of a snake eating its own tail? It's a closed loop. The revenue numbers go up, which looks great on paper, but it can totally hide how much demand is coming from real outside customers. This loop can inflate company valuations and make it super hard to figure out how financially healthy the industry actually is. So, as you can imagine, all of this has kicked off a huge debate. On one side, you've got people saying this is a genuine tech boom, something that's going to reshape our entire economy. But on the other side, you've got people worried that we're just living inside a giant speculative bubble pumped up with easy debt and a whole lot of hype, and that sooner or later, it's going to pop. Let's look at both sides, because they both have a point. The people who say it's a boom will tell you, look, companies like Microsoft and Google are making insane amounts of money, they've got huge cash flows and can totally handle this debt. But then the it's a bubble crowd fires back, pointing to that crazy 7-to-1 spending ratio.
And they'll bring up a recent MIT study that found that for 95% of companies trying out AI, they're getting zero return on their investment. Zero. If you're an investor, you might see this as a pretty smart move. Guys like Chris Igo from AXA argue that buying these corporate bonds is a great way to tap into the cash flow of these tech giants. You get a piece of the action, but without all the crazy ups and downs you see in the stock market. It's seen as a more stable bet on the future of tech.
But then you have the other side, and they are deeply skeptical. You have portfolio managers like Al Cattermole, who are basically throwing their hands up and saying, how are we supposed to analyze this? With all this circular financing going on, doing a traditional credit analysis on these bonds is, well, it's almost impossible. How do you figure out the real risk when it looks like companies are just shuffling money between each other?
Okay, but the risks here go way beyond the financial markets. It's not just about money. This AI boom has very real, very profound consequences for our planet and for people all over the world. These are the hidden costs, the things that don't necessarily show up on a corporate balance sheet.
Let's just start with energy consumption. Look at this number, 23 gigawatts. That's the planned power capacity just for OpenAI's infrastructure alone. It's a mind-boggling figure that really shows you just how thirsty for electricity these AI systems are.
And to really put that into perspective for you, 1 gigawatt is about what an average nuclear power plant puts out. So we're talking about the equivalent of 23 nuclear power plants, just for one company's AI plans. It's no wonder Microsoft CEO said the real bottleneck for AI isn't chips anymore, it's energy. This is putting a huge strain on power grids everywhere.
And then there's the human cost. This boom is creating a massive divide. On one end, you have AI engineers in Silicon Valley pulling down huge six-figure salaries, but on the other end, the very models they're building are often trained by thousands of data annotators in places like Kenya who might make as little as $2 an hour for incredibly difficult, mentally exhausting work like sifting through toxic content to teach the AI what to avoid.
So when you put it all together, the risky financial engineering, the incredible strain on our planet's resources, the deep human toll, it all leads to this one giant trillion-dollar question. What are we actually building here? And where is this all headed?
And look, the stakes of this whole gamble might be even higher than we think. Now, this is going to sound alarmist, I get it, but a leading AI safety advocate, a Nobel Prize winner no less, has warned that the next species AI could wipe out is us. And this isn't some fringe idea. A recent survey of actual AI researchers found that, on average, they believe there's a 16% chance of human extinction because of AI. That's like playing Russian roulette, but with an extra bullet in the chamber.
So here we are, standing at a massive crossroads. The AI revolution promises this incredible, prosperous future for all of us, but we now see it's being built on a foundation of staggering debt, immense resource consumption, and some really heavy, unanswered questions about our own future. So which is it? Are we building a rocket ship that will take humanity to the stars? Or are we just building a beautiful, glittering house of cards that's doomed to collapse? The bet has been placed, but the outcome? That's still anyone's guess.